Big changes are happening in the real estate world. People who usually invest in homes have bought a lot fewer houses recently. In fact, it's the biggest drop we've seen since the big financial problem in 2008. Some cities, like Charlotte, saw a big 60% drop, while Atlanta and Las Vegas had even bigger drops of 64% and 65%. Las Vegas is now even lower than it was back in 2017. But this is good news if you're a regular person looking to buy a home. There will be less competition from those big Wall Street investors in 2023. The reason is that things aren't working out for them anymore. Interest rates are going up, and in some places there are more empty rental homes, plus rents are going down. So it's not a great time for real estate investors. Challenges in the rental market. Rent prices in the United States have dropped by 1.2% compared to the previous year, affecting 72 out of the country's 100 largest cities. This means that in many places it's become cheaper to rent a home. For instance, in Oakland, California, rent prices have decreased the most. However, these numbers can be deceiving when you look at them closely. The reality is that many property investors are facing some tough times. A lot of rental properties are managed by big companies like Progress Residential. These companies sometimes play tricks with rent prices. They might raise the rent by a lot, like 40%, and then lower it by 30%, and they do this in a way that seems random. This unpredictability makes life difficult for renters because they don't know what to expect. What's more, high rent prices have made it impossible for many Americans to afford a place to live. As a result, there are more empty houses or apartments. This has led to landlords, especially the ones connected to Wall Street, to stop buying new properties. They are not sure if they can make a profit anymore, so they're being cautious. The combination of these factors has created a rental market that's challenging for both renters and property investors. It's not just about finding a place to live. It's also about making the numbers work for the people who own these properties. Mortgage interest rates and investors. Now, let's talk about mortgage interest rates. They have gone up a lot, which is causing some trouble. This is not just a problem for people who want to buy a home, but also for landlords, the folks who rent houses to others. They are finding it hard to make money because they have to pay more to borrow money. And the money they get from renting is not going up. Imagine you're an investor, a person who buys homes to make money. In this tricky situation, the money you make is only 4.6% of what you spent to buy the property. That's not much, and it's even less than what you have to pay for the money you borrowed. This was not how things used to be. Before 2022, the money you made from the property was more than what you had to pay to borrow money. That's why investors liked buying homes, increasing cap rates and investor returns. Now, let's dive deeper into how we can make things better for investors and the housing market. To get investors interested in buying homes again, we need to make something called cap rates go up. Think of cap rates as a way to measure how much money you can make from a property. If cap rates are around 6% or 7%, that's when investors start to get excited. There are two main ways to make cap rates go up. The first way is by making people pay more for rent. If rents go up, it means the property is making more money, which is good for investors. However, this isn't easy to do because rent prices can be all over the place, and people might not be able to afford higher rents. The second way to increase cap rates is by making the prices of homes go down. This is a more practical solution. When homes become more affordable, it's easier for investors to buy them. Lower home prices mean they can make more money from renting or selling the property. So by lowering home prices, we can make the housing market more appealing for investors, which would be good for everyone involved in real estate. Impact on the housing market. Cap rates are like a signal that tells us how much money you can make from a property. If cap rates are high, it means a property can make you a lot of money, which makes investors happy. But here's the thing. As investors decide to step back from the real estate game, it's expected that property prices will start to go down. Now, we can't predict exactly how much they will drop or when it will happen. It's a bit uncertain. But here's what we do know. When investors stop buying and start selling lots of properties, that's when we might see the big drop in property prices. We're not there yet, though. Uncertain future. The future of the housing market remains shrouded in uncertainty. It's like trying to solve a mystery, because it's challenging to predict exactly what will happen. One of the reasons for this unpredictability is that investors are still very much involved in the real estate market. They haven't given up on it, which adds an element of unpredictability. Another factor to consider is that more and more people are buying houses not to live in, but as an investment. They're looking to make money from the properties they own. While this might seem like a smart move, it could become a problem if there's a major economic downturn. In such a scenario, the market could take a hit, potentially hurting both these investors and those looking to buy a home to live in. It's a complex situation with many variables at play. Environmental considerations. An emerging trend that individuals in the real estate market should be aware of is the growing importance of environmental sustainability. Both buyers and sellers are increasingly considering eco-friendly and energy-efficient features in properties. Homes with solar panels, energy-efficient appliances, and eco-conscious designs are often seen as more valuable. Being aware of the environmental aspects of a property can help individuals make informed decisions. For sellers, investing in environmentally friendly aspects of a property can help individuals make informed decisions. For sellers, investing in environmentally friendly upgrades can not only make their properties more attractive to buyers, but also increase their long-term value. Buyers, on the other hand, can consider the long-term savings and environmental impact of their prospective homes. The impact of remote work, which has become more prevalent in recent years, is influencing real estate choices. More people are now able to work from anywhere, which has led to a surge in demand for properties in suburban and rural array. Buyers are increasingly seeking homes with dedicated home office spaces, and the proximity to urban centers has become less critical. Sellers can benefit from understanding this shift by highlighting the remotely work-friendly features of their properties, such as high-speed internet access and flexible living spaces. The ability to adapt to these changing work dynamics can enhance the value and marketability of a property. Smart home technology. Another notable trend is the integration of smart home technology. Smart homes are equipped with systems that allow for remote control and automation of various functions, from security to energy management. Buyers often prioritize homes with these features as they offer convenience, security, and potential energy savings. For sellers, incorporating or promoting smart home technology can make their properties more appealing and potentially fetch higher prices. Understanding the advantages of smart home systems and how they can improve daily living is essential for both buyers and sellers in the modern real estate market. In summary, staying informed and prepared in the ever-evolving real estate landscape in 2023 involves considering environmental sustainability, acknowledging the impact of remote work on property preferences, and embracing smart home technology. These considerations are crucial in making well-informed decisions, reducing risks, and adapting to the changing dynamics of the real estate market.